Hello friends, my name is Masood. Today we'll discuss about a topic cost reimbursable contract. Friend, today's topic is very easy to understand and very important. With respect to exam point of view, friend, if you are a student and studying project management or you are planning to give exam of PMP, so friend, with respect to exam point of view, this is a very important topic, and you will see this topic in the exam. At least 5 to 10 questions will definitely be there, especially if we talk about PMP exam related to this topic, contract or cost reimbursable contract. So friend, your mind, your vision should be clear about this topic so that you can clear the exam easily. Secondly, friend, if you are a professional project manager and working in any organization as a professional project manager, so again this is important that you must have to know that what is cost reimbursable contract and what is your role as a project manager in the cost reimbursable contract. So friend, let's start. First of all, I would request to please subscribe to my channel and click on the bell option as well so that my new videos can reach to you. So let's start. Cost reimbursable contract. uh, Friend, first of all, see that this topic we are basically explaining with respect to project management, PMBOK, project management body of knowledge of PMBOK. So under the project management, this topic pertains to the procurement and then contracting and cost reimbursable contract. So first of all, friend, we have to understand that what is project basically. We have to start from project. Okay, then we will see that what is procurement and then we will see contracting. So let's start from project management or project. Friend, as per the definition of PMBOK or project management body of knowledge, project is a temporary activity which has a beginning and ending point, and it gives you a unique output or product that is called as a project. For example, if you are implementing e-commerce solution for a customer and you have to deliver that project within 4 months, and after 4 months the project will finish and no more resources will be working on that project, so we will say that it is a project. Why? It is temporary and it is giving you a unique output or product that is called as project. Remember friend, one thing, that project can never ever be an ongoing activity. It will always be a temporary activity. That is why we are saying that it is a project. Now friend, if you can understand the concept of project, we can talk about procurement. Okay, what is procurement actually? Procurement basically, friend, purchasing of goods, services, softwares, hardware. Basically, see friend, here whenever we are implementing projects, we have to procure, we have to purchase several things. For example, you are implementing e-commerce solution, okay, and you know that you need three servers, one for development, one for UAT, and one for production. So basically you need three servers. So to purchase these three servers, friend, as a project manager, you know that these three servers are required. So you have to contact with the procurement department, and the procurement department will contact with the vendors, and then they will arrange these three servers. So see friend, here procurement means that arrangement of goods, services, software, hardware. Similarly, you need some particular software to purchase. So what you will do in that case, you have to contact with the procurement department. The procurement department will purchase any particular software whatever you will suggest that it is necessary to purchase. So friend, as a project manager, you must have to know that what thing is required, and you should have a justification that under which head these services will be purchased, and you must have the clear visibility about what have to purchase and when to purchase. So friend, as a procurement means that purchasing of goods, services, hardware, software, etc. So these purchasing, basically in general sense, you can just understand that this purchasing, the purchasing of things is called as procurement. Now contract, basically cost reimbursable contract. Now first of all, we have to understand the contract, friend. Here contract basically means, friend, that agreement between two parties on based on some terms and condition. For example, you want to purchase a car. You just uh, went out at a shop of someone, like car selling shop, and like showroom, car showroom you mean, and you just like some car, and after some discussion you reach some level, and you agree to the cost, and once you agree, the seller will sell the car and the consumer and the customer will purchase the car. So to just to formalize the things, a contract will be agreed between the two parties. That is called as contract. Remember, friend, when one thing that normally when we talk about contract, we are basically referring to a legal document. Legal document means any particular document which is on written format, and the two parties or more than two parties can agree to the terms and condition. And remember, friend, one thing that the contract means that it can be referred in the court as well. Okay, so that is called as the concept of contract. Contract means that a legal document or a written document based on some agreement, based on some terms and conditions which are agreed between the two parties. Now, friend, cost reimbursable contract. Cost reimbursable contract means that is one in which the contractor is reimbursed the actual cost they incur in carrying out the work plus an additional fee. What does it mean? If you just see cost reimbursable contract, cost reimbursable means, friend, for example, just take an example for here, that for example you are a contractor, and you have received a contract that you have to build any particular house. Okay, any particular flyover, for example flyover you have to build, and as per the contract it has been defined that if you build the flyover, so whatever the cost you will incur, you will receive that cost, plus you will also receive any, for example, additional fee as well. So that is called as the cost reimbursable. Just take an example. For example, you are building a flyover, and the cost incur, for example, cost incur is $40,000, for example. So you will receive the $40,000 plus $5,000 more as an additional fee. Just take an example. Just take an example, like cost plus additional fee. This is called the concept of cost reimbursable. Okay, friend, a cost reimbursable means the cost which actually incur plus the additional fee. So I have already given you a very try to give you an example of the flyover example. Like for example, if you as a contractor you incur cost, your incurred cost is $40,000. So as per the contract, it should be clearly defined that cost plus $5,000 more will be your part of contract. So if you spend $40,000, so $5,000 will be more provided to you, so $45,000 will be given to you. Now, friend, what are the limitation here? Basically, in most cases, a cost reimbursable contract will hold legal limitations to prevent it being abused or misappropriated by either party involved. Limitations often include allowable fees, meaning only fees that would logically incur from the contract can be applied. See, friend, here basically there are some limitations as well. Basically, in most cases it can be considered as bribe or something else like that. So most of many cases there are some limitations as well are involved, because as per the documentation, as per the concept, it is not a bribe basically. However, in some cases, in some scenarios, it can be considered, it can be used, misappropriated or misinterpreted as a bribe as well. So friend, remember, friend, one thing, that there are some limitations as well, because in many countries, in many scenarios, this contract is not allowed, because it can be misappropriated, it can be misused as well. So due to that conditions, due to that reasons, this contract is not legally allowed in many organization. friend, the advantages of that contract is that it is very high quality, because contractor has incentive, less chance of having the project overbid, often the expenses that than a fixed price contract, since contractor don't need to charge a higher price to cover the risk of a higher material. With reference to the contractor, the ability to take on a project in which the design or scope of work is not fully defined, the chance for additional profit with performance incentives are the pros and the advantages of that contract. Cons are that for the buyer, the major disadvantage of this type of contract is the risk for paying much more than expected on material. Because see friend, here you are saying that whatever the cost you will incur plus additional fees, so there are chances that this is a disadvantage for with reference to contract. This type of contract is the risk for paying much more than expected on material. So there are chances of like misusing of this contract are there. So friend, thanks a lot for your time. I hope you like this video. If you like, please share it with your friends and colleagues, and thanks a lot for your time.